Hello and welcome to 5-Year Club video number 289, where we will learn a little bit about today's carnage in the stock market. This is an article from USA Today. Stock market drops again, wiping out 2018 gains for the Dow and S&P 500. The stock market sell-off on Wall Street intensified Wednesday, knocking the Dow down more than 600 points and wiping out the gains for the year for the blue chip average and the broad Standard & Poor's 500 index. Technology stocks, which had been the best performing part of the market earlier in 2018, suffered the biggest declines. The Nasdaq Composite, home to many of the market's most popular tech stocks, plunged 4.4%, pushing it down 12.3% from its late August high and deeper into official correction territory. The latest swoon, which knocked the S&P 500 down more than 3% Wednesday, signaled to many Wall Street pros that the decline was entering a new, more dangerous phase. There is growing concern now that this decline is more than a garden variety pullback or drop of 5 to 9.99% and could morph into a drop of 10% or more for the broad market. And my cat is doing bad things. Out. She's getting into boxes. With the big sell-off today, the market may have moved from pullback into correction territory, says Nick Sargan, chief economist and senior investment advisor for Fort Washington Investment Advisors. Random plug for somebody when talking about the news. Yep, so here we see October's been pretty rough. If you didn't know. Roughest month in a while. After Wednesday's rout, the S&P was down 9.4% below its September 20th record, and the Dow was 8.4% lower than its October 3rd all-time high. Both of the closely watched indexes are now down less than 1% for the year. The Dow fell 608 points, or 2.4%, to 24,583, whatever that means. Fears about the economy earnings. The sharp, swift decline has been sparked by fears that the U.S. economy and corporate earnings will start to slow due to trade disputes, more interest rate increases from the Federal Reserve, and slowing growth in China, the world's second largest economy. This is a correction, said Bruce Biddles, chief investment strategist at money management firm Baird. The question is, does it lead to a bear market or a decline of more than 20%? Technology stocks and media and communications companies accounted for most of the selling. AT&T sank after reporting weak subscriber numbers, and chipmaker Texas Instruments fell after reporting slumping demand. Interesting enough, if you look at Texas Instruments and their calculator division, they sell the same calculator for 20 years. It's crazy. Apple comes out with some new, way improved iPhone every year. Texas Instruments is able to sell the same graphing calculator for 20 years. Anyway, banks, healthcare, and industrial companies also took heavy losses. Disappointing quarterly results and outlooks weighed on the market, stoking investors' jitters over future growth and corporate profits. Bond prices continue to rise, sending yields lower. You've seen more discouraging company commentary this quarter than you have the last two, said Tom Martin, senior portfolio manager with Globalt Investments. Another plug. You're really starting to get more of a groundswell of caution. There's some concern about the fourth quarter and what that's going to look like. Well, that was very helpful. Investors were weighing the latest batch of company results in the busiest week of the quarterly earnings calendar. S&P 500 companies are expected to deliver 22% earnings growth for the third quarter, with every sector except communication services, which includes Walt Disney, AT&T, Netflix, and Google parent Alphabet, expected to show earnings growth according to S&P Global Market Intelligence. About 24% of the companies in the S&P 500 had reported third quarter results as of Wednesday. Of those, 57% delivered earnings and revenue results that topped Wall Street's forecasts. So the companies are reporting great things, but it's causing people to sell the stock because they're worried. Disappointing results. Even so, traders are concerned about future growth and amid rising inflation, interest rates, and uncertainty over trade. Some companies, including Caterpillar and 3M, have reported disappointing results and warned of rising costs relative to tariffs related to the U.S.-China trade dispute. Among the big... It's really funny because it's not really a U.S.-China trade dispute, it's really a Trump-China trade dispute. Among the big companies slated to release quarterly results this week are Microsoft, Amazon, and Colgate-Palmolive. The Commerce Department said sales of new U.S. homes plunged 5.5% in September, the fourth consecutive monthly drop. The report is the latest sign that the housing market is cooling amid rising mortgage rates. Several home builders declined following the release of the report. Beazler Homes USA slumped 6.9% to $8.57 a share. Safe havens. Bond prices rose, sending the yield on the 10-year Treasury note down to 3.11% from 3.16% late Tuesday. The slide in bond yields came as traders sought out assets traditionally viewed as safe havens. Investors may also be betting that the Federal Reserve may elect to take a more measured approach to rising interest rates should the economy show more signs of slowing. It's been driving a good bit of the move in the 10-year lately. Expectations about how many rate increases there are going to be in 2019, Martin said. Many economists say they think growth will start to slow next year as the effects of last year's sweeping tax cuts and increased government spending begin to wane. Well, there you have it. People are worried about the future. And, so, yeah. Which means it's a great time to save some money, because stocks are potentially about to go on sale. It's not a bad idea. All right. Hope you enjoyed the video. Have a fabulous evening.